This is Peter Milios from the Finance News Network. Stocks rose overnight as investors grew increasingly confident Thursday's consumer price index will show cooling inflation and signal to the Federal Reserve that previous interest rate hikes have had their intended impacts. The Dow Jones Industrial Average advanced 0.8%, the S&P 500 gained 0.9%, while the Nasdaq Composite added 1.8%. Big tech, EVs, REITs, building materials, and credit cards and retail and apparel were some of the better performers. Oil services, precious metal miners, and telecom were among today's worst. Economists polled by the Dow Jones expect the CPI data to show prices cooled by a modest 0.1% in December from the prior month. The forecast still calls for a 6.5% increase from the prior year. Excluding food and energy prices, economists expect the CPI data for December will be 0.3% higher than the prior month and 5.7% higher than a year ago. Bond yields also pulled back as investors prepared for the report. It's really all about the kind of positioning ahead of CPI, said Daniel Lai, Chief Investment Officer at Fort Pitt Capital Group. You're trying to get in there ahead of a big move on the report tomorrow. The Nasdaq is on track for its first 4-day rally since September. The index has climbed this week as investors pick up beaten down technology stocks, which they expect to fare better if the Fed eases on its rate hiking campaign. All US sectors finished higher overnight, with real estate, consumer discretionary, information technology leading the pack, whilst consumer staples and energy were the worst performers. After several years of pain in the biotech space, companies operating within this sector look to be in play in 2023. Earlier this week, cashed-up Johnson & Johnson's CEO said they are looking for opportunities to explore in this sector. Then, today, Seagen stated that it is also hunting for deals for emerging oncology drugs and plans to pursue licensing, partnerships, or asset acquisitions with biotech startups. In an interview at JP Morgan Healthcare Conference, Seagen CEO David Epstein says that the recent downturn in biotech stocks is putting companies under pressure to find cash, which could open up more opportunities for Seagen to agree on deals. In commodity-related news, the prices of gold, copper, and iron ore have continued to grow over the last few months, relating to the elimination of COVID lockdowns, as well as the expectation that the US Federal Reserve will decrease interest rates. The prices of gold have risen 15% since November 3rd, on the back of signs that inflation may be cooling, and the Fed will slow its interest rate hikes. The price is at almost $1,900 per troy ounce, reaching the highest level since April of 2022. The rally comes as the market increasingly expects that the Fed will slow the pace of its increasing in borrowing costs as inflation eases off its highs. Higher interest rates make gold, which unlike bond provides no regular returns, less attractive. In regard to copper and iron ore, China's reopening of its vast economy has caused a rally of the two prized commodities, with benchmark copper prices passing $9,000 per tonne on Wednesday for the first time since June. The end of COVID-19 restrictions in China, the world's largest consumer in commodities, has triggered a jump in a range of metals exposed to the Chinese property sectors such as copper, steel, aluminium, although some analysts and traders expect these gains may not be sustained throughout the year. We are expecting a rapid rebound in China's economy, said Caroline Bain, commodities economist at Capital Economics. Big bank quarterly results will follow on Friday, kicking off a new earnings season. The SPY futures are pointing to a rise of 57 points. Thank you for listening.